Inflation is a persistent economic challenge that can affect everything from the cost of everyday goods to long-term investment strategies. In the U.S., inflation has been a key focus for policymakers, businesses, and consumers alike, especially with the fluctuating economic conditions in recent years. As inflation continues to impact purchasing power, it's important to understand the strategies that can help manage its effects. In this video, we'll explore the top 10 strategies that individuals, businesses, and the government can implement to cope with inflation in 2025. 1. Adjusting interest rates to control inflation. One of the primary tools used by the Federal Reserve to manage inflation is adjusting interest rates. By increasing rates, the Federal Reserve can reduce consumer spending and borrowing, thereby cooling down an overheated economy. Higher interest rates tend to slow down inflation, making goods and services more expensive to finance through credit. While this approach can help curb inflation, it often leads to higher borrowing costs, affecting mortgages, car loans, and business financing. 2. Diversifying investment portfolios. Inflation can erode the value of savings over time, which is why it's crucial to adopt diversified investment portfolios. To combat inflation, many investors turn to assets that tend to perform well during inflationary periods, such as real estate, gold, and inflation-protected bonds like TIPS, Treasury inflation-protected securities. Diversifying across various asset classes helps shield investments from the negative impact of inflation and enhances long-term financial security. 3. Focusing on cost control in business operations. For businesses, inflation often means rising costs for raw materials, labor, and other inputs. Cost control strategies are essential to maintain profitability. Companies can focus on improving operational efficiency, negotiating better deals with suppliers, or investing in technology to automate certain processes. By finding ways to cut costs without compromising on quality, businesses can offset some of the inflationary pressures they face, allowing them to maintain competitive pricing and profit margins. 4. Increasing wages and compensation packages. As inflation pushes up the cost of living, many workers face the challenge of stagnant wages. To counteract this, businesses often increase wages and compensation packages to keep employees' purchasing power intact. Companies that offer higher wages can also attract and retain top talent, which is essential for maintaining productivity and innovation. For employees, negotiating for wage increases or cost of living adjustments, COLAs, in their contracts can help ensure their income keeps pace with inflation. 5. Switching to energy-efficient solutions. Energy costs are often a significant component of inflation, particularly when fuel prices rise. Both households and businesses can reduce their exposure to fluctuating energy prices by switching to energy-efficient solutions. Investing in energy-efficient appliances, upgrading insulation, and using alternative energy sources like solar power can help lower utility bills over time. These measures reduce dependence on volatile energy markets and protect against future price increases. 6. Embracing technology and automation. In response to inflationary pressures, many businesses are turning to automation and technology solutions to enhance productivity and reduce labor costs. Automation helps businesses achieve greater efficiency and output with fewer resources. For individuals, using technology to manage personal finances, such as budgeting apps, investment platforms, and automated savings tools, can also help make inflationary periods more manageable. 7. Hedging with commodities. Commodities, such as oil, agricultural products, and precious metals, often act as a hedge against inflation. When inflation rises, the prices of these commodities tend to increase, making them valuable assets to hold. Investors may choose to invest directly in commodities, purchase commodity-based ETFs, or consider commodity-linked stocks. By doing so, they can potentially earn returns that outpace inflation. 8. Adjusting product pricing to keep pace with inflation. For businesses, adjusting product prices in response to inflation is one of the most straightforward ways to preserve margins. However, price hikes must be managed carefully to avoid alienating customers. Strategic pricing involves understanding market conditions, competitor pricing, and consumer demand before implementing price increases. By setting competitive prices while accounting for inflation, businesses can maintain profitability without sacrificing customer loyalty. 9. Focusing on long-term financial planning. To safeguard against inflation, individuals and businesses should prioritize long-term financial planning. By setting clear financial goals, building emergency savings, and investing in inflation-resistant assets, people can ensure they are prepared for the economic fluctuations that inflation causes. Regularly revisiting and adjusting financial plans to account for inflationary impacts helps build resilience against economic shocks and ensures financial stability over time. 10. Promoting government policies to address inflation. On a broader scale, government policies play a crucial role in managing inflation. Policymakers can implement fiscal policies such as tax cuts, subsidies, or targeted social programs to help alleviate the burden of rising prices on low and middle-income families. Additionally, ensuring that the supply chain remains robust and effective can reduce the risk of supply shortages that contribute to inflation. Governments must balance stimulating economic growth with controlling inflation to maintain a stable economy. Inflation is a natural part of any economy, but its impact can be mitigated through effective strategies. From adjusting monetary policy and increasing wages to investing in technology and focusing on cost control, there are numerous ways to manage the challenges inflation presents. For businesses, households, and policymakers alike, staying proactive and adopting inflation-resistant strategies will be crucial for maintaining financial stability and long-term growth in the U.S. economy in 2025.